Joey, my daughter is 15 years old. And even though I know after her driving for the last 6 months that she knows what she's doing, pretty confident, I still have these moments of sheer terror. And I feel like maybe this episode is kind of addressing a little bit of that as it relates to how long can I pay my life insurance premiums?
How long can I, or how long do I have to?
Oh,
I think that's the question that most people are coming to the table with when they're early on in the process of infinite banking. And here's the thing, Russ, I don't blame them. I mean, how many other things have you signed a contract for, and it has a monthly or annual amount of money that you owe the other party that you say, well, how long do I have to pay for it? Right? I mean, think about that. On your mortgage, when you sign up for a mortgage, what are you asking? You're looking for interest rate and you're looking for the term.
right.
So it's not really uncommon for somebody to ask that question at the outset of starting a life insurance policy.
Well, and I think too, we tend to think of things like an expense. We think of this as a death benefit. So then our brain does go into, well, it's going to be expensive. How long am I going to have to do it? When can I get this over with? And in this episode, we kind of talk a little bit about Nelson Nash. He addressed this in his book, Becoming Your Own Banker. And that's, if you're coming into this podcast for the first time and you haven't heard us go through this, every Tuesday, we break down the book, Becoming Your Own Banker, and the concept of infinite banking. And the goal is to help people who are already on this journey of using cash value life insurance policies as a tool to help them get closer to what they want, which is financial freedom, to understand how to better use it. And also sometimes just to help them overcome some of the natural questions that come up.
Yeah. And so I think today the real surprise will be, how do we change our mindset? Because the policy itself and the actual premiums that we pay can be either scarce or they can be abundant.
Well, I will say this is that I had a meeting earlier this week with someone who is in their 70s who has bought one of these life insurance policies, actually bought multiple ones. And we were not talking about how long does he have to pay it. He was asking the question, how long can I pay it? And that is what we're going after. And I hope you'll enjoy this episode. So let's belly up.
Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Welcome into the Roundtable Podcast, where every week we break down the subject of infinite banking and go deep down a rabbit hole sometimes to help you understand the intricate details that surrounds the subject matter. I'm sitting around the table with two of my favorite guys, the Italian stallion, Mr. Joey Murray. What's up, Joey?
Glad to be here, man. Masters Day. I should say Masters Day. It's Masters Week, but it's kickoff of Masters, so I'm excited.
Is that what that green shirt's about?
That's right. I had to wear it. I was there last year, as you know, and it was super exciting to be there in person. So, yeah, I'm a big fan.
Next to you, I've got downtown Ernie Brown, the man I refer to as the Indiana Jones of our finances, because he goes deep into people's finances looking for gold. How are you, Ernie?
I'm doing just about as well as Joey is.
What does that mean?
I mean, I'm into this Masters thing, man.
You guys are into golf.
That's right.
That's a 4-letter word for me.
Well, I've seen your games, so I know exactly what you mean.
Yeah. I've seen yours too. And I think you should take 2 weeks off and then give up the game. They are not here to listen to that, though, because that would not be an interesting conversation unless they were watching it. And some of you are watching it, so I appreciate you being a part of our inner circle. If you're not in the inner circle and you want to participate in this, you want to have access to all the coaches where you can ask these questions about how your policy is performing, what sort of things do you need to know more about to make it perform better. Join us at wealthwithoutwallstreet.com/inner circle. All right, gentlemen, the conversation today is about how long do I have to pay my premiums? So, Ernie, how long do I have to pay my premium?
Well, I'll borrow Joey's answer, which is you don't have to.
Okay, tell me more.
You create a contract with the insurance company. They agree to afford you all the benefits in the contract, and you agree to pay the premium. If you don't pay the premium, you can end the contract.
Okay, is that what they call a unilateral contract?
That's right.
I knew you were going to use my word.
Your word.
You made fun of me about
You
it.
and I both heard that word from Nelson Nash, as if you and I came up with that word.
He also said free contracts with free people, which I totally agree with that.
All right, so let's spin that a little bit differently, Joey. How long can I pay a premium?
Well, reality is that's the question as you get to learn what infinite banking can do for you and will do for you. You shift to that, right? I think the first question, just in all fairness, I think we should break this down. How long do I have to pay premiums? Comes out of the mindset of scarcity. It's like, this is an expense. How long do I have to pay it? And then once you understand the asset of infinite banking, being able to use this to expand your life and create a life that you are looking for, now you're like, how long can I pay it? I want to continue to get these benefits.
Well, so whenever we look at these contracts, they do have a definitive time frame in which each one of them says how long we can. And some of them say we can pay it to age 121. Some of them say we can pay it to age 100. Some may even say age 65. Now, what would be important, do you think, about the differing time frames in which how long we can pay those premiums?
Well, those different pay periods are telling us about a particular type of policy, and that what you're describing there is actually different types of whole life policies and their payment structures. Age 65, policy paid for 10 years, policy paid 1 year. Those are all different type of insurance policies. So that's really what we're talking about. And how long is the payment period has a lot to do with how the policy is priced and the corresponding death benefit that goes with each one of those structures.
Well, so I think there's a couple of different questions we've answered here. How long can I? How long do I have to? But also, I would ask one last question is, how long should I pay it? What would you say to that, Stallion?
Well, I think how long should I pay premiums is all dependent upon your capacity, right? There's an optimal way to fund a premium. And I think it goes back, the way I think about it is, it kind of goes back to the how long can I pay premiums? Because if I have cash and I'm in so like a lot of people think, well, I'm about to retire. I'm in my 60s, my 70s. I don't want to pay a premium when I'm in my 60s and 70s. But the reality is, once we look at the way these contracts are producing, and I'll use Nelson as an example. Do you think Nelson wanted to stop paying premiums when he would give the insurance company $300 and some odd for a premium, annual premium, and they were sending him a check for $4,500?
No.
There would never be a time that he would say, I feel like we're maxed out here. Like, I don't want to do anymore.
Well, we actually talked about how the first 15 years of the policy, he used the dividends, which we talked about a couple episodes ago, to reduce the premium that he had to make. So he was actually reducing that $300 premium, which had he not done that and he was paying that $300 premium in the later years, the dividend wouldn't have been $4,500. It would probably been more like $10,000.
Yeah, it's silly once you understand the power of that compounding. There's never going to be a time, if I have, so to go back to answer the question, how long should I pay premiums, is when I absolutely have the ability to fund it, I should fund it.
Well, so Ernie, you and I were talking about this the other day, and there's a lot of different ways, right? There's not a one size fits all in this. And we always kind of come back to this is more of an art than it is a science. But I love to kind of like get different perspectives. That's the purpose of this podcast, is to go deep rabbit hole on one small area of this subject matter. People are like, oh, this is too complex. I don't understand it. Well, listen in weekly. You can figure it out. We're going to break it down. We're going to do a good job, hopefully. But Ernie, we were talking about how long should someone pay a premium, and you had a thought process as it related to when they start taking passive income from their policies.
Yeah, that's right. And go back to what Nelson says in the book. He says, if you knew at passive income time, you were going to get back everything you put into a system, would you object to putting more into it? And so with that thought process, are you telling me that the policy can become a source of passive income? Number one, we're going to get to passive income time, or we're going to want to get there. And can we use the policy to do that? And how long should I pay premium? I don't know exactly how long that is for each person. It probably differs. But I do think, and this is what I do talk to a lot of people about, is we want to create this policy where we do use it over the next several years to do the things we're going to do. We're going to finance our own needs. We're going to go borrow against the policy, create passive income streams back to us. But at some point, we're going to want to hang that up. And at some point, we're going to want to take our policy and with the value that's in there, start to bring it down. We want the policy to become an income stream in of itself. And so I think at that point that we want to determine for ourselves, we'll stop paying premium and put the policy in reverse.
So a second ago, Joey, you said that one of the struggles that we might have, and I know we've all at this table probably even faced personally, is the idea that that premium that we're paying could be looked upon as an expense. And so I'm going to take you to Nelson Nash's book, Becoming Your Own Banker. I'm looking at page 38. And if you remember the book or you have it near you, don't pick it up if you're driving, obviously. But if you're looking at it, you notice that this is the page where he would go through the differences between differing whole life policies, comparing it against term insurance on the far right-hand side. And at the bottom, he starts describing what would the perfect policy look like and how should we look at that. So I'm going to read this for just a second. He said, in describing this design of a policy, some people have called the process of putting paid up additions riders on an ordinary life policy, quote unquote, overfunding the policy. He says, maybe that can help in the overall understanding, but the objective should be simply to get as much money as possible into the policy with the least amount of insurance. So he said our objective should be to put as much money as we possibly can into the policy, one, and then additionally with the least amount of insurance. Break that down a little bit, Joey.
Well, from the standpoint of our goal and our challenge to put as much as possible, I think that, to me, that goes to, is there ever going to be a point in our life where we believe we're not going to be saving some amount of money? Okay. That to me is something that we have to come to grips with. And in that case, like if I feel like I'm going to spend every single dollar in retirement or in this passive income time frame that we're talking about, then there's really no room to continue to pay a premium. You'd be going backwards, right? But the chances are when we get there, we're going to have some money, and it's a matter of, do we want that money to be, and I'm going to use your word on this, Russ, lazy. In our checking or savings account, collecting dust and not collecting interest? Or do we want it to continue to work at a rate like we've just discussed about Nelson's policy? I mean, there's no chance that I'm going to want it just sitting in a checking account.
Well, I will speak from being a business owner, and I'm looking at business owners' balance sheets, their retained earnings, their checking accounts, all this stuff I get to see on a regular basis. And I see things happening in their cash that they would never allow to happen in their business. And this is what I mean by that. If you walked in as a business owner and you saw every employee in your business during working hours taking a nap, what would be the reaction, Ernie?
Am I a kindergarten teacher?
There'd be a little butt chewing happening. And if it happened daily, what would be the result, Joey?
People will be getting fired.
Yeah.
Downsizing.
Yeah. We'd be finding new people. That'd be simple. I remember a story, and this is kind of off track, but I love bringing stories in when they hit my brain, they hit my lips. I remember this guy that ran this business very similar to me. He had his car rental business. And he walked outside, and one of the guys that works for him is out there reading the newspaper as this other guy's washing the car. And when he come out the door, the guy was sitting there reading the newspaper, pops up, like I got to find something to do. I shouldn't have been out here doing that, right? And he said, no, have a seat. He looks over to the guy next to him. Hey, Ernie, whatever you do, make sure you don't get Joey's newspaper wet while you're washing the car. I definitely don't want him not to be able to read the classifieds to get the new job because he's about to be out of here.
Wow.
Dude, he's up and at him. But I just think about that. Like, as business owners, we would never allow that sort of stuff to happen. But what is happening with dollars sitting in checking accounts? We call retained earnings just sitting there taking siesta.
Yeah, that's unacceptable. And I think the reality is we didn't know that was a possibility, that there was another alternative. But now, because we're practicing infinite banking, we know that we would never want our money to be in that situation.
Well, so I think we have to kind of understand in concert to what we're talking about. What is our identity? What is it that we want to have happen with our money? So in light of that, Ernie, as we're talking about, like, how long should I? How long can I? How long do I have to? What's the answer? How do we help people listening right now make some decisions based on that?
Yeah. Well, you mentioned the different policies. Some can allow you to put in premium to 121, some to 100, some to age 65, some for 20 years, some for 10 years, and one for 1 year. And we're talking about wanting to have a place where we can put cash flow. So
Yeah.
the question really is, well, how long do you want the option to be able to put cash flow somewhere?
I think
hold on. That begs a point that we probably need to talk about is, do I have an option other than just to pay premium? Is there a way to stop paying premiums?
Mm-hmm. Yeah, absolutely.
Right.
And we talked about some of that, again, a couple episodes ago when we talked about the dividend. And what Nelson did when he started the policy was he used that dividend to help pay for some of the premium. And at some point, it could pay for the entire premium. Well, then also what I was talking about, at some point we want to put the policy in reverse. There is an option where we can what's called reduce pay up the policy. And that's a one-time decision you make where you stop all premium dollars going in.
Well, and I want to point this out as a clarity point. When you have a policy that's set up to age 65, you're in effect saying, I don't want the option to pay past 65.
That's right.
I'm literally limiting my ability to fund this after that point in time. Whereas if you had a policy that was to age 100 or age 121, and you chose to stop at age 67 or 70 or whatever the age was, you had the option to do it. But in many cases, I don't think people understand these mechanics and the possibilities there. And so they think I have to choose one or the other right now. And in reality, it's kind of like you're leaving your options open by going with the longer term and then being able to change that if need be.
Mm-hmm.
Anything you add to that?
What you're really saying there, just what I like about that is it just gives me a feeling of flexibility, which I'll say what I don't like about that is when I'm trying to hang out with some friends, we're trying to nail down some plans. They're like, oh, we'll just see what options. I'll get back to you. I'll see if I can come up with some better plans or something. But as it relates to a place to put our cash, no, I would love to have as many options as possible.
Well, I mean, we always talk about how do banks operate, right? Where do banks put their cash? Are they sitting on trillions of dollars of just sitting in their vault?
No.
Do they have billions of dollars of cash in life insurance?
Yes, 100%.
They have billions of dollars sitting in cash value life insurance. I mean, this is just one of those things. I think it always comes back to me when people ask that question. I think it comes from first, it's just early on, and I get it. But I think it's something that has to do with the world that we've been living in of scarcity, right? that there's a limited amount of money that's possible to come to us.
Well, there's so much marketing around this, right? I think we have all been trained to believe that, man, at some point, my income is going to cut in half. Whenever I quit work, I'm not going to be producing anymore. And therefore, I'm not going to get any money. I'm going to have to live off of the scraps left over from my Social Security or whatever it might be. And I think the reality is, if you're listening to our show right now or anytime, you are in the very small percentile of people who know and understand that money follows value. And if you have the identity of somebody who says, I'm really not a producer, I'm not going to actually produce anything of value, then you should expect that, right? You should expect for your income to literally drop in half when you are not working, or even lower than that. But if you believe that you're going to continue to add value to the world around you, you're going to need a place to park money.
Well, and I think that fear, I mean, I've heard it said, and I believe that even the Bible addresses this, that what we fear we will address daily, if not sometimes daily. And so this concept of our mind thinking out and playing out ultimately the future, because that's in our brain. But yet when we look at it differently, we say, no, that's not what I want to do. Nelson said here that the objective should be simply to get as much money as possible into the policy with the least amount of insurance. So here's a couple of things. I want to change your mindset, because a lot of times the struggle and the scarcity comes from thinking that we're talking about life insurance. I have to remind people all the time, our company doesn't sell life insurance. That's not what we do. Is that a product that people buy from our company all the time? Absolutely. But we're not selling life insurance. It's not what we do. So if Nelson said here, he said that the objective should be to put as much money as possible into a policy with the least amount of insurance, the way I would think about it, and I would change your mindset, then the best insurance policy, Joey, I could buy is one that I could put $100,000 or 100% of whatever I have available to save, whatever that number is, and buy a life insurance policy with a $1 death benefit. Right?
That sounds a little backwards.
But that is that's exactly what Nelson said.
Yeah.
Right. If you could put as much money as you want to save in a life insurance policy, and the insurance company gave you a death benefit of $1, then he would define that to be the most efficient, effective life insurance policy you could own.
That's true.
And if you thought about that, then you would have to go, well, okay, well, this clearly can't be about the life insurance or death benefit, because if I'm only getting $1, then there's got to be more to it.
Yeah. And that's where it kicks in. I mean, this is a banking system where you own and control your cash flows for the purposes of financing the things in life and for the creating the passive incomes that you're looking to produce.
Well, I went back in my financial days when I was, helping manage money and separate people from money and being a money babysitter and all of those sort of things. I remember reading this article where they had interviewed 4 or 5 of the, richest people in the world. And they were asking them, and this is like 2010. No, that's not true. It's probably like 2008. And they're asking them, like, what would be your expectation for return? What would you want to have? If you had a place that was safe to put your money, what would be your expectation? What would you want it to return? Now, some of us may go, well, because they're wealthy, they've got all this money. It's what, 20%, 50%, 250%? You know what their responses were, Joey?
No.
Like 1.5%.
What?
2.5%. Like 3% was like the highest on the list.
Wow. I wonder why that is.
These are, and you said this is the most wealthy
people in the world. This was their response. Why is it? What is more important? Return on your money or return of your money?
In that case, 100% return of your money.
And what are we talking about here? Are we talking about an investment?
No.
What are we talking about is a savings instrument.
That's right.
A place to store our cash. our place to store our cash before we put it to work. And when we put it to work and it comes back home, and I use this analogy all the time, it works in 2 out of the 3 slots I have in my garage. I can park in it, right? I get in the car, I drive out, I go to work, I earn money, I come back, I park it in the garage. For what purpose, Ernie?
To store it until you take it back out again.
To protect it from the elements, right?
That's right.
That is the same thing that our cash values are being protected by the insurance companies. Is a storage place. When we take a loan against it, that's when we're driving it out of the driveway going to the office. But when we go make, the returns, whatever those returns are, we're coming back home. We'll put that baby back inside the garage. At least 2 out of the 3 cars get in there, right? Got to be some cleanup in that 3rd slot. But you get the point. Is that I think that's what helped me early on switch my mindset of this. Is like, it's not an expense. How long do I have to pay? Well, as long as I can. If I've got money, why wouldn't I put it here, right? I mean, I'm never just going to drive home and park my car on the street. It's just not. It's not an option. Not something I'm going to do for long, right? I mean, think about it. Every time you've ever had one of those big, huge, severe weather storms coming by, what are you trying to do? Like, man, I got to get that thing inside.
Yeah, no doubt. So I want to kind of wrap this up, Russ, and I'll be honest with you. If you've had these thoughts about, man, how long can I pay this premium? Like, how long do I have to? Even like a year, 2 years, 3 years into your policy, you're not alone.
No.
Right? It is so easy to fall back into this mindset, even just unknowingly. The other day, Russ, I know you're going to bust me if I didn't bring it up, so I might as well just fall on the sword here. But I was looking at my annual premiums that are due at certain times of the year, and I looked at December and I said, "Oh my goodness!" And I said this out loud. That's why I knew you're going to bust me. I mean, I owe $60,000 next month. And what did you say? Like, immediately.
You owe it?
Immediately put me in my spot that it is not an expense when it is going to a system that I own and control, that I can immediately put to work in our short-term rental business and all these other places that we have this need for cash right now.
What a beautiful thing. There's lots of people that are listening to this right now that would trade spots with you. That would say, please, can I wish I had that ability, because maybe they're not insurable. Maybe they're limited to how much money they can put into the insurance policy, not because of their capability, but because of something physical, maybe something that has happened that's prevented them from buying the insurance policies. We're blessed in the fact that we haven't run into that. We have that ability. And I would say this too, is that, I mean, when you talked about paying annual premiums, I mean, between us, it's pretty fair to say there's a policy premium due pretty much every single month, and we pay them annually.
That's right.
I mean, it is one of those things that we've accumulated, and it's a part of our daily life and activity. And I know it seemed like December maybe was a bigger chunk for that month, and it happens. But just know that we have options. And if you ever get worried, like what happens if I can't pay my premiums, then you might want to listen in next week, because that's what we're covering.
Stay tuned. So thank you, as always, for being a part of our roundtable. For those of you who are not about to join us in the inner circle, you have an opportunity. Go to wealthwithoutwallstreet.com/inner circle. You'll join the community and then be directed into our inner circle. We'd love to have you. As always, we will see you next week.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next episode.